Welcome everyone. Thank you so much for joining us for this week's Small Biz Essential webinar. Today, we're talking about where to start when it comes to funding your business. My name is Sierra Ladroma, and I serve as a project manager for the Iowa Center's Women's Business Center. The Iowa Center's Women's Business Center is funded in part through a cooperative agreement with the U.S. Small Business Administration. You will all receive an email after this event from my colleague Ben Schultz, thanking you for attending today's session. It will also include information on how to contact our speaker for today, as well as a form to complete. Please do us a big favor and take some time to fill this form out. This information allows us to continue providing free educational programming for small business owners in Iowa. Before we start, please go ahead and take some time to locate the chat functions on your Zoom screens. This way you can join the conversation by asking questions or adding your comments. Today's featured guest is Jose Vanellis, Director of Microloans at the Iowa Center for Economic Success. Jose manages and develops and implements the Iowa Center microloan programs. Jose has the responsibility to maintain a healthy loan portfolio to ensure the availability of these resources for future entrepreneurs. So make sure you have your chats open to ask your questions about funding your business. Jose, the screen is yours.
All right. Thank you, Sierra.
Welcome.
I like when people introduce me that way. That's very exciting. Very, very exciting. All right. Cool. Can you see my screen? Awesome. So Sierra told me to do this class, to do this seminar, and I was like, really? Why do you want to do this? And actually, I got really excited because this is one of the things that I have a lot of passion on, and it really interests me. And myself as a business owner as well, I wish I had this class before. So I'll go ahead and tell you a little bit about myself, and then we'll keep going with the class. But as a housekeeping, like Sierra said, let's make sure you find that chat in your Zoom and make sure that you're asking questions. At the end of the class, I will answer all of your questions, and hopefully I have the right answer for you. If not, you can always email me, or if you don't want to ask a question right now, you can always send me an email. You're going to have access to this presentation after the seminar. So a little bit about myself. I'm Jose Vanellis, Director of Microloan, like Sierra said. And I came to the United States in 2008. I'm originally from Venezuela, and I came here to study. So I got a baseball scholarship, and I was able to go to school and play baseball. And I got a degree in economics. Right after school, I went into the financing industry, and I was able to work in the banking industry for about 8 years. And right after that, I went into having my own business in energy efficiency, and now I'm here. I still have my business in energy efficiency though. So today I'm going to talk to you not only as the director of Microloan, but also as a banker and a business owner. And I have been, funding your business, where to start. I've been there. I've been in that shoe. I've been in asking myself a lot of questions like, what do I need to do? How do I get funding? Do I need to be prepared for this? Do I need to come up with a business plan? What do I need to do to get some funding to start my business? So I've been there, and it could seem challenging, to be honest with you. So let's get started. A little bit about the Iowa Center for Economic Success. Our mission is to empower Iowans with potential to succeed as they pursue opportunities for financial success. So that's what we do here. And our priority is education, capital, and networking. So what a best way to start this with education, right? That's why you are here in this seminar, trying to get some education, trying to find some tools and ideas to start your business. And right after that, you go into that capital, that financing. You can either do it through Big, you can either do it through friends and family, and I'll talk a little bit more about that, or you can do it through here, through us. And then while you do all of that, you start to do your networking. So great things that we have here in the Iowa Center. So a little overview about the class today. Business owners or entrepreneurs will find the need for financial resources at some point in their career, either to start a business that you have so many ideas about, or to grow your current business. So it is important to make sure that you do your homework before making any financial commitment. Again, making this step could be really challenging, but it just takes a little bit of your time to do this. So during this class, I will give you some tools and ideas to make sure that you make the right financial decision when it comes to your business. So some of the topics that I will be talking about today is going to be the company funding stages. Why am I going to be talking about that? Because no matter in what stage you are with your company, you're going to need some type of funding. Either if you're at the beginning of your starting your company, or if you're in the middle, or if you're just about to sell your company or something like that. And then I'll talk about the different ways of fundings. This one was very difficult for me because there's so many ways to fund a business that I have to pick just a few of them. And I think that as business owners and entrepreneurs, these are the 7 that I like the most. And then we'll talk about a little bit about the Iowa Center microloans, and also we'll talk about resources and answer your questions. So before we start, probably many of you that are trying to start your business or already have your business are asking some questions. And some of the questions that you might be asking yourself is, what do I need the money for? How much do I need? How long until I have to pay it back? What is my current financial shape? Do I need any collateral? How soon do I need the money? That's an important one. And how does my credit look like? Because I need to know how my credit looks like if I'm going to go out there and ask for some funding. So let's go ahead and start with this seminar, and hopefully I can answer all of your questions, and we'll go from there. So let's start with the company funding stages. The first one is that concept and seed stage. That concept and seed stage is when you have that great idea, right? You come up with that idea. I'm gonna have a software company. Here's my idea. I'm going to deliver meals. I'm going to do energy efficiency company, like in my case. So you have that concept, you have that idea, and now what do you have to do? During that concept seed stage, you have to make sure that you do the product development. You have to make sure that you do the training. You have to make sure that you do the certifications that you need for that great idea that you have. You got to make sure that you prove that your idea is going to be a good business. So you have to spend time and money on there. And usually the funding here, it comes from yourself. It just comes from your time, because you don't have to spend that much money. It's just the time that you have to spend there. Maybe you need to spend time for training and certifications, and you might be able to finance that with your savings, or with your or with a credit card or something like that. Then we go into the startup. That's the actual time to start your business, when you're gonna make revenues, when you're gonna make sales. It's typically between 1 to 2 years, year 1 to year 2. When you're at that stage, usually you need funding for equipment. You need funding to hire a new employee, to hire your new management team, just for working capital. That's when that startup funding start. Then you have your first stage funding. That's capital to full scale your manufacturing or your sales, or when you are at that time in your career or in your business that you're ready to make the next step that make your product better, or that you need to inject more capital into your business so you can lower the cost of your products. That's that first stage. Then we go into the second stage. And the second stage, many business don't have it, but I like to talk about it because that's when you need capital to spend your products and services. So many companies use these as, I want to open another location, or I want to open another I want to have another service. I just want to spend in my company. I just want to have another branch in my company. So not many companies do it because many companies just want to stay in just one location, but it is one of the stages. And then finally, you have that bridge stage. That's the capital that you're going to need to maintain your business. You're ready at your peak, you're making good sales, but you're always going to need some capital for your business. No matter in which stage you are, you're going to need some capital. And usually at the bridge stage, you only need like a line of credit, right? Like a line of credit so you can use for cash flow or just for emergencies. Hopefully that makes sense. So let's move into the different ways of funding. And I'm gonna go to the most obvious one, which is bank loans and credit card. And this one is interesting because I'm just going to talk about personal bank loans and credit cards. So some of the benefit of the bank loans and credit card is that you have control retention, right? You don't have an investor that is investing in your company and taking some of your equity. You are the one funding the company at this moment, so you have control of everything. There is a lower risk for the future funders. And why do I say that? Because no one is going to lend you money if you don't put money into your company yourself. So investors, bank, micro lenders, they're going to look at you putting money into the company, money and time into the company before they make a commitment with you. And then the beauty about the credit card, there is beauties, and then there is also not so much of a beauty, but you have a 30 days grace period with your credit card. As an example, when I started my business, I bought the majority of my equipment and my trailer with a credit card. And I remember that was a great move because I didn't have to use much. And within 30 days, I was already receiving checks from the county to pay for my credit card. So that's a great option. And then sometimes bank loans and credit cards are just a quicker option. It might take 2 weeks. So if you're a credible person and you have good credit, I don't see this being a bad option for you. Some of the things that you need to take into consideration is that when you do credit cards, they have typically high interest rate, so you got to pay attention to that. And also personal bank loans, they also have high interest rates, sometimes between 7 and 10%. As a good story, when I was getting ready for this presentation, I found out that Airbnb actually started their company with credit cards. They just started applying for credit cards, and that's how they started their software company. And they raised enough capital just to pay the credit card, and look where they are right now. They're doing pretty great. So this is a good option. The next one is going to be sweat equity. Sweat equity is the unpaid labor employees and cash-strapped entrepreneurs put into project into your idea, right? This is going to be yourself working into your idea. This is going to be yourself working into your business. This is going to be yourself working your full-time job, but then going home and working into your business, working nights and weekends. You have your own resources. You don't have an investor that is taking ownership in your in your company. You can develop your ideas at your own time. I really love when entrepreneurs and small business owners do these, because this means a lot for them. When they grow, then they're going to see back and say, hey, I put a lot of time into this and I created a really, really good company, a great product, great service. And again, you control the decision of any intellectual property that you create. So that's very important. Um, as an example, just a quick example, there is a juice place here in Des Moines in University Avenue. And I remember when I was a banker, the owner of Lifestyle Juice came to me and he said, hey, I have a business idea, Jose. I want to open a juice bar. And I was like, oh, that's great, Nico. Um, Tell me about it. So we went through the whole business plan, and I did help him out with the business plan. And it was great to go through the whole thing, but he didn't have good credit, just to be honest with you. And he wasn't able to get a loan, but he was working his full-time job and then doing nights and weekend into his business. And guess what? He's doing really well right now. He's been in business for more than 3 years. And, that hard work that he had before going full time, it paid off. So I really like when you can have 60 to 70% of your income coming from your business before you make that transition from your full-time job going into your full-time being your business. Um, Another example is just Facebook, right? Um, Mark was able to create his company out of his dorm room, so that was his sweat equity. So he didn't put much money into it. I know, yeah, he had a partner. We all saw the movie and all of that, but he put he put a lot of time into it. It was his time. It was his sweat. So one thing to take into consideration with this one, it works better if you don't have a partner. And I can tell you about that. I had a partner before. When you're doing the sweat equity, you got to make sure that you get full credit for your contributions. Let's move to the next one. Your assets. Many entrepreneurs and small business owner, use home equity, use their home, use the equity of their home to start the business. You can either do a home equity line of credit, or a HE loan. One of the things that you to pay attention with that is that you have to make sure that you have enough cash flow to pay your monthly payment on that home equity. So that's going to become part of your expenses in your business. Retirement accounts. Many people open their business with borrowing from their 401k or from their IRA. The majority of the times they have a determined amount of time plus the interest that you have to pay. And with 401 with IRA, sometimes you just have a grace period right there that you don't have to pay interest. Do I recommend it? Not really, but that's an option out there. The next thing is life insurance. Sorry about that. If you have life insurance, you can borrow often up to 80 or 90% of the cash value. And that's usually comes at a low interest rate, but I would recommend so you talk to your insurance agent. And then your own asset. I can tell you, I can go out to my garage and have a lot of things to sell. So doing a garage sale, so selling some of the stuff that you have, selling some jewelry that you have that you don't use, that your grandma left, something like that will help out. I can just give you a quick sample. When I started my business, I had 2 bikes, and I had to sell them to buy my machine, to buy my installation machine for my energy efficiency business. And it was great. Now I went ahead and bought 2 more bikes, But at that time, that was the right decision to make, to sell those bikes so I can make my dream come true, that it was to have my business. So always check on your assets first before anything. Uh, some of the consequences with this is like, if you fall back, you're gonna have some consequences. You might lose your home, you might lose your retirement. So make sure, or you might lose your bike, your awesome bike. So make sure that you're making the right decision there. Next is going to be friends and family. How awkward is to ask money to your friends and family? That's very awkward. No, let me tell you. I never done it, but I don't want to do it. Sometimes they call it fools. I don't really like that. But friends and family are who know you best. In most cases, they're willing to fund your business. It doesn't cost anything to ask them for help. And you just need to be honest with them. You just need to be honest and tell them what the risk is that they're taking. Some of the benefits is that private loans can offer significant advantages over traditional loans. For example, the interest rate. The interest rate could be lower than traditional loans. And in some cases, you don't even have to pay interest rate. Or in some cases, they will just give you the money and will be a grant because you're a good friend or a good family member. You also have to do less documentation. You need to provide less documentation to them. I like that, but I also don't like it. Again, contradicting myself. My wife will be like, you do that all the time. Why I don't like it sometimes is because if you handle the documentation, it becomes more professional. If you have your business plan, if you have your projections, if you have your bank statements, if you have your ideas all in a document, you can present that to your friends and family, and it's going to be easier for them to make the decision. That's going to show them that you're being thorough with what you're doing and that you're being honest on the risk that they're taking. So that's one of the downsides. So if you have to be honest with your family. And the other thing, you have to make it on writing. If you're getting a loan from your friends and family, make sure you put it on writing. So that way they feel more secure and you also feel more secure, and you create that ownership in there. The next one is going to be venture capital and professional investors. These are firms that are experienced in managing funds. These are firms that are experienced in investing in startups. These companies wouldn't exist, and if they weren't for us, for small business owners or for startup, because they're just looking for that next new idea where they can invest their money into. They have to go out there and they have to raise the money so they can invest in your company. So that's a good thing. So they're working out there for you. They usually have good track record. They make good decisions. So if they're investing into your company, you should feel really good about that. Some of the downsides of it is that venture firms seek a substantial ownership stake in your company, and sometimes they want to make the decisions. So before you do this, you got to make sure that you are aware that you're going to give up some of your ownership in your business. Next, it's going to be angel investors. Angel investors are wealthy individuals called angel investor that like to make some financial bets into new businesses, into startup. And the beauty of this is that these angel investors are just looking at startups because that's where they make the most profit of. Because if the new business become a really huge business, they're going to make good money. They have a lot of added value to it because of their knowledge, the people that they know, the relationship they have in the community. That will help you a lot when you get funding from angel investors. Again, it could bring good networking for you, and they prefer startup businesses in early stages. How can you find them? You can ask your banker, you can ask your accountant, your lawyer, you can ask venture capital firms, and often local colleges, college business school have the contacts for these angel investors as well. And I'm gonna give you a good tool out there. You can always ask us. We can always help you with that as well. The downside with the angel investors, again, they have a partial control in your business and they often want to make decisions. You can see this as a good thing. You can see this as a bad thing. This is your baby. This is your business. You want to make all those decisions, but you're always going to have the help of the angel investor if you want to go this route. Then we get into the last one, and the last one is going to be micro loans. So micro loans, they could come from the SBA, the Small Business Administration. They can come from local micro lenders, loan funds, organizations that might have a loan fund out there. The SBA microloans or any microloan help a small business secure the financing they couldn't get from a traditional lender like a bank. Okay, they look at individuals that have lower credit. They look at the 360 picture. They usually have low rates, and the SBA, the majority of the time, or all the time, they use the middleman, and the middleman is going to be the banks, credit unions, and nonprofit lenders that are out there. They're usually up to $50,000. These loans are usually up to $50,000, and the thing with this is that you're going to need a lot of documentation to make sure that that you can get approved. The other thing for microloans is just microlenders and loan funds. Like I mentioned before, in your community, you might have a microlender or a loan fund that is out there that helps small businesses. You can always reach out to them and see what programs they have. They usually require order to complete a business training and business planning seminar before receiving these loans. And that's normal. That's something that you want to do. You want to be prepared for the loan. And these organizations get you prepared for a loan. Some of the downsides of these is that to get a favorable loan term or favorable term, you need a solid business plan. You need extensive documentation of your credit worthiness. They look at different ways when it comes to your credit. They're probably looking at global debt. They're looking at your ratios. They're not looking at debt to income ratio. They're just looking at the whole picture. And they usually need business training and in some cases collateral. So what I'm getting with this is that it's going to take longer with the micro lenders to get your loan because you need to be prepared for that. The micro lenders want to make sure that you're prepared to go in business. All right, so now that I finished with the 7 ways that you can fund your business, this was really difficult. Again, there's other ways to get funding, and you have crowdfunding. You can go out there and have different ways to get your funding. But I came up with these 7. I think these are the most important, and you can always reach out to me if you have any questions or any ways of funding, and I can always help you out with that. But I want to talk a little bit about the Iowa Center microloans, and right now we manage 2 types of microloans. We have the TSB, the Targeted Small Business Loan, which is established by the Iowa legislature to help businesses owned by women, individuals with minority status, people with disability, and service disabled veterans. So on that one, at least 51% of the business owner has to be a minority. It has to be a woman, an individual with disability, or a disabled veteran. They have to be on that minority category. The business have to be for profit, and they have to gross at least or no more than 4 millions per year. And of course, they have to be located here in Iowa. That's one of the programs that we manage right now. And then we also manage another program called the Iowa Center Loan Fund. This is similar. It is up to 50,000, and it is 6 to 9% fixed interest rate. It has a long term of 5 years. That's the maximum. There's no prepayment penalty. In some cases, it requires personal guarantee, or you can go with a co-borrower, a co-signer, a strong co-signer. And it cannot be used for real estate purchase or continuing education. So what you need to do, oh, I'm sorry. Let's mention this. What can you use these funds for? For the TSB and the Iowa Loan Center, the Iowa Center Loan Fund, you can use these funds for working capital. If you want to add new employees into your company, if you need inventory or supply, if you need to purchase some equipment, if you need to fix up your business, let's say you have a new lease and you need to make some improvement, you can use those the funds for that. And also now these days, it looks like we're doing more stuff from home, and we're using more and more social media, so you can market your business as well with these funds. So what do you need to do? Again, at the beginning, I said, hey, you might have a lot of questions. What do I need to do? I have this really good idea. And to be honest with you, if you ask my wife how many ideas for a business have I had, she would right away get upset, because I always have a business idea. But I like to do my research. I like to go there and see if it's something that is going to work. And to make sure that your business is going to work, you gotta get ready for financing. And some of the things that you have to do is have your business plan, have it all laid out there. Is this really going to work for me? Do I want to get into this? Know what you can afford. That's very important. Sometimes we just get blindsided with the idea and we don't know how much we can afford. So I'm not saying go cheap with what you have to do, but make sure that you set that limit for yourself and just for your finances. Your financial will say it. I studied your financial statement, especially if you're already in business. Studying your financial statement is something like I cannot stress enough. It's so important. This is like your stats. If we go into if we take this into sports, these are your stats. You're gonna see your gaps out there. You're gonna see where you make the most money. You're gonna see where you spend the most money. Your financial statements are really, really, really important. And I suggest that you check, you review these quarterly, monthly, quarterly, and annually to make sure that you're keeping in track with your company. Check your credit report. Back in the day, you couldn't check your credit report, and people used to have businesses. Now these days, you can check your credit report in your bank. You can go to your bank and say, hey, I just want to check my credit report. I'm not saying just check your credit score. I'm check your credit report, because you don't know what is out there. I have had in the past clients that had collections that they didn't know about, and it was a medical collection, and it was only $100, and that prevented them to having a loan. So make sure that you're checking on that all the time. Establish your collateral. That's really important when you're thinking through all of this. What do I have for collateral? Is it going to be my house? Is it going to be my car? Is it going to be the equipment that I have in my business? What is that collateral going to look like? And you got to make sure that you're ready to give that as a collateral. And then number 6, show your equity contribution. I cannot stress this enough as well. No one is gonna lend you money. No one is gonna give you money. Not a bank, not an investor, not a micro lender, not, not even your friends and family, if you don't put your contribution into the business. This is really important. It could be your money, it could be your own funds, it could be your time. So make sure you're putting your own contribution into your business before you go out there asking for funding. And then you're doing it right now. You're here in this class, you're researching for financing options. Now you have some options. Now you know where you need to look at. Now it's time to go out there and look at those places that could give you financing, right? This is like buying a house. You're not gonna go out there and buy the first house that you see. You're probably gonna say, well, I take that back. Maybe in this market, you may have to buy the first house that you see because the market is crazy. But normally when you're seeing a house, you want to see different houses. So same concept here. Make sure that you're just looking at your financing options. So make sure you're shopping around for your financing options. The next thing is the startup budget. This is the startup budget that we use here at the Iowa Center. And I took this from another presentation. And this is really great. Right when I saw it, I was like, this is awesome. I wish I had this when I started my business. I just did my business plan without doing this, and this would have saved me so much time. But at the beginning, you have out there, the estimated expenses, the monthly expenses that you're gonna have into your business. You need to be aware of what your expenses are gonna be in your business before you move forward with funding or with looking at the funding option or getting some capital. And then you're gonna need the one-time cost. That's the second part of that spreadsheet out there. And these are one-time costs that you're going to inquire when opening the business, doing the EIN, or if you have to pay for the EIN, sometimes you don't have to pay for the EIN. Sometimes incorporating your business so you can do business here in the state of Iowa. Those are some of those expenses that you need to put in there. Doing a certification, doing a training, all of those things, those one-time costs. And then you add all of them and it will tell you how much money do you need. It's a great tool. It's a great tool. That's why I put it over here. That's why I stole it from another presentation. Some of the resources that I can provide you with today, and Ben, or colleague here, he will send an email out with some of the resources, my contact information. And again, you can always ask me questions. But the Iowa Center has really, really good resources, and I put the link out there. You're gonna get a copy of this presentation, and you can click on that link. But some of the three that I really like is the Entrepreneurship Readiness Assessment. This is a great tool that you can go out there and make sure that you're ready to be an entrepreneur. The Simplified Business Plan Template. I wish I had a business template when I was opening my business. This is going to save you so much time, and it's going to give you an idea of how you're going to go with your business plan. And then the startup business budget. That's what I showed you before. Great tool. Then the Iowa Source Link. I've been using this for a long time with my clients, and there is a lot of information. There is a lot of reading out there just to see if you're ready. They have really, really good information there. And then myself, if you have any questions, reach out to me. I'm always available. I'm always ready to answer your questions. Go from there. So hopefully you guys learned something with this presentation. Let's see, Sierra, do we have any question?
We do have questions. So when people registered, they were able to submit questions as well. So I have quite a list for you. Let's get into it. As the director of microloans, and with your experience, can you share a few questions that you would ask and talk about with an entrepreneur who's looking for a microloan?
Yeah, definitely. The first question that I guess the first question is just story. Why do they want to do that? Um, I am a numbers person. I am a credit person, so I will always ask you for your credit, where you are in your credit. So I will go directly to credit because credit is going to tell me a lot about your spending habit, your payment habits. So I will go always relating to the credit, and pretty much go from there. But I like to listen to the stories behind the scenes, why you want to open a business or why you have that business. Um, it's always it's always good for me to hear why they're doing what they're doing.
Jose, can you share with us what the credit range be for someone that you would consider as in good shape for a loan?
Yeah, definitely. You know, anywhere above 700, I would consider someone in a good shape for a loan. It's just gonna depend not just on the credit score, though. A lot of people think just like the credit score is gonna tell you a lot. I can tell you, my parents been in the state only for 2 years and they have good credit score, but their credit score doesn't tell me anything. It's just the credit history that tell me a little bit more about your how you pay, how good of a credit worthiness person you are. So 700 to me is good. Sometimes in the 600 we can always work something out, but it's just hard to tell.
Yeah, you shared before that checking in and maintaining your credit is crucial for entrepreneurs and non-entrepreneurs. Do you have any suggested platforms where people can go and check their credit?
I will always go to your bank first, right? Those are who have your account. There is I will always go with them. There's always Credit Karma out there. Credit Karma back in the day used to be way off. Now these days, really good. I don't want to tell you where you need to go, but I will start with your banker. Ask your banker what will be the best platform for you to check your credit.
Okay, excellent. One of the questions that came in is more situational. It
Awesome.
is what can I do immediately for my business, although I'm still suffering from financial crisis? So I assume this is what can I do immediately to fund my business, although there is a financial crisis?
Again, I couldn't stress enough. Just getting ready, just doing your homework, just doing all the paperwork that you need to do to get to your business. I go back and I can go back here to, these are the things to get ready for financing. Create your business plan, know what you can afford. I know things are getting really rough right now with COVID, but you need to know what you can afford. Study your financial statement. Not only just study your bank account, where you're spending the most money and where you getting the money from. You also have to look into that. Check your credit score. We just talked about that. Just ask your banker. Go to Credit Karma, Equifax. You can always look for those ways. But these are the 7 things that I will just consider before getting into financing. This is what you need to do right now.
Mm-hmm. And I think that kind of leads into this next question that was submitted. It says, for those just developing a business and also wanting to protect personal assets, what tools or activities do you recommend regarding startup expenses?
If you want to protect your assets, the sweat equity, you put in your time, using credit in a different way. At the beginning, I talked about the credit card. You can do personal loans. You can always You can always use the micro lenders, right? What a good program we have here in Iowa for minority-owned business, like it is the TSB. Maybe the TSB is not. Maybe you're not a minority, but there's other ways of funding. We also have our loan fund. Take advantage of those avenues that are out there so you can protect your asset? I really like that question because I like the idea of using someone else's money to make money. I really like that idea, but always putting your time and effort into it. Again, I mentioned before, you need to put your equity contribution before someone is going to put money into your business. So just take advantage of what is out there. Just take advantage of what is out there, and don't use your assets.
Excellent. Can you, the next question is, why is it suggested to go to credit unions rather than big bank institutions?
Um, uh, that's a that's a question that hit me hard. It's just a preference thing. It's just a preference thing because if we're talking about SBA is going to have the same rules for a small business, either in a bank or in a credit union. A credit union it could be more flexible when it comes to some of the things. But if you're trying to get an SBA loan, they're just going to have the same rules for the banks. They're just going to have the same rule for the credit unions, and they're just going to have the same rule for micro lenders like us. So it's just a preference thing. I won't get into that argument, to be honest with you.
Okay, do you have any advice or guidance when it comes to grants specific to minorities and women?
You said grants?
Grants, yeah.
Not really. There were some grants out there for COVID. We were part of it. The state of Iowa was part of it. Dream Iowa was part of it. As of right now, I don't have any idea for grants. I know that there is micro lending out there for small businesses that you should take advantage of. But nothing as far as grant right now, unless your business is a software business and there is some software investors out there, or the state of Iowa has something that they could do grants for software companies.
Would you happen to know any of the funding benefits in forming a nonprofit versus a for-profit business?
Not really. I don't have the answer for that question. I don't want to lie to you. I don't want to answer something that I don't know about.
Okay, we're going to move to the next question. It's, what are some smart ways to pay yourself and employees?
It's hard. At the beginning of your business, it's always hard to pay yourself. I think that when you do your business plan, when you do your projections, you always have to put some salary out there for yourself. Either if it's going to be W-2, if it's going to be 1099. I'm not an accountant. I'm not a tax person. So, but those are some of the things that you can do. At the beginning, it's going to be hard. You might not pay yourself, but I always encourage business owners to put the expenses of their salary in their business plan, in their balance sheet, in their profit and loss.
Great. What guidance do you have for entrepreneurs who know they need funding but don't know how much?
Again, I can, I can go back. Just Ben is the man. He will send you out that email with that template, and that template is going to be a huge help. I didn't have it before. I was way off of my calculation when I started my business, but with that one, I will encourage you to use that template. That's going to help you. That's going to help you a lot.
Yes, and for anyone watching, I really want to encourage attending or registering and attending for the Always Ready Financials event that we have, and Always Ready Business Plan event that we have every other week. Two last questions. What are examples of some collateral?
I mentioned, if you're trying to do some collateral, like personally, like if you're going to use your assets, it's always going to be it's going to be your home. If you're trying to do a home equity loan or a line of credit, you can use your vehicle. You can use the equipment in your business. You can use the sales. You can use inventory. So those are some examples of collateral that I can give you at the top of my head right now for a business. In some cases, I've been doing a lot of home. In some cases, some micro lenders will even take yearly as a collateral. So people can get very, very creative when it comes to collateral, but the normals are the one that I mentioned before.
Excellent. The last question that we have is, after applying for a loan and being approved, what is the typical timeline that the funds will be available?
If you're asking for a regular bank or an SBA, once the loan is approved, usually in a bank you have it right away. It might take a couple of days for you to have the funds available. But for example, if you're doing it through us, if you're doing it through the TSV program, once you get approved, it takes 4 to 6 weeks to get the funding, to get the money from the state, and then an extra 3 days for us to send it to you. So, that's some of the timings that I have right now.
Excellent. Jose, do you have any other pieces of advice or tips before we say goodbye?
Yeah, definitely. I know how you feel like if you're starting your business or if you're looking for funding, if you already have your business. I know there's a lot of questions that you have. I know that is overwhelming because I've been there and I have a lot of clients that is overwhelming, but it just takes just a little bit of time. You think that it's going to take a lot, but it actually doesn't. Once you do it one time, you can do it again. And I encourage you to use the resources right here to reach out to me, and don't be afraid to take that next step of being an entrepreneur and a small business owner.
Jose, thank you so much for spending your time and sharing your expertise with us today. For those of you who are attending and watching this, thank you so much for tuning in. Please take Jose up for that contact. Reach out to him or reach out to anyone at the Iowa Center if you are at whatever stage of your business, whether it is an idea or you've already started, or if you're a growing business and are looking for some more foundational knowledge. I have gone ahead and put in a couple links in the chat that lead you to our class catalog. We have a lot of our programs starting next month. It's going to be incredible programming specific to entrepreneurs at whatever stage. So feel free to reach out to us. Have an amazing day. Jose, always a pleasure.
Thank you, Sarah. Thank you, everyone. Have a great day and take care.